Good morning, and thanks for tuning into the trade setup. I'm Neeraj Shah. The global news flow first. The Fed sees more restrictive rates possible if inflation persists. Frankly, if you look at the commentary, it was focused on fighting inflation, even if it comes at the cost of growth. The only question that a lot of people are now, or rather, a thought that a lot of people now have is that what if the high frequency indicators of inflation, which are starting to come off, brings about a change in the second half. Michael Burry put out that very large set of observations recently. I think Bill Ackman had put out that set of tweet threads as well. It's worth viewers, it's worth reading a couple of those tweets in order to try and understand how some of the people are thinking about this issue. The tensions between China and US are simmering. China's foreign ministries accused the US of technological terrorism after US told both Nikon and the other company to not send in some of the technological expertise to China, those chips to China. So those tensions are simmering. Stocks in Asia, though, are higher as crude stays below the $100 per barrel mark. And in fact, on crude, US and allies are discussing capping Russian oil at $40 to $60 a barrel. On that, frankly, I'm not an expert here, but since March, we've heard of a number of moves aimed to try and from the West, aiming to try and checkmate Russia. It hasn't quite worked out, has it? In some fashion, at least on some of these points. So who knows? Any case, the long and short of this is that the Fed didn't sound very in those minutes didn't mention that, oh, if inflation was cooling off, they could alter from the course. For now, the fight remains on inflation. The US markets had a sedate day of trade. Therefore, if you frankly look at what they did, about 0.25% or thereabouts. So they were fairly quiet. The other cues in terms of what the dollar index or Bitcoin or the 10-year yield are, dollar index flat at 107, but 107 is a very high number. Keep that in mind. US 10-year yield is down about at 2.9 and Bitcoin up marginally. Keep in mind, while the dollar index is important, actually, I just put out a tweet of a Bloomberg chart about half an hour ago, which shows how that when you look at various periods since 2013, strength in the dollar, and currently the dollar is ripping through all other asset classes, strength in the dollar has usually coincided with weakness for equities. Can that happen all over again? Remains to be seen. For now, though, the SGX Nifty indicates a start which is marginally in the green. I thought 16 odd points the last time I checked. I don't know what the current status would be, but we'll just bring that up. 127 points. Okay, I'm mistaken. 16,109. This is very strong. This is as of 8:01. So good strong show from the SGX Nifty for now. So the momentum continues. And remember, yesterday too, if you bring up the movers and shakers chart in yesterday, the market breadth was positive. A bunch of stocks took this thing about crude cooling off very well, right? From paint companies like Kansai and Aerolac to tire companies like Seat, FMCG companies like Emami. A bunch of these stocks did very well. What didn't do well? The usual suspects, Oil India, ONGC, they continued to fall. Just remember, viewers, yesterday we brought about this note which mentioned how I made this point yesterday that the first 2 days of a fall in ONGC and Oil India were because of the government move, not because of crude price fall. Now that crude has fallen, there is a subsequent impact happening into Oil India and ONGC. And one of the longest serving bulls of these stocks, JP Morgan, Pinakin Parekh, turned underweight on ONGC. That was also a bit of a telling sign because they were usually very constructive on this trade from a long-term perspective. But yeah, oil stocks have been taken to the cleaners. Just shows the risk when you invest in companies which have any kind of impact from a government policy move. At times, you'll make small money, but it'll be very difficult to sell out in such a losing trade proposition. And now, yeah, this is, of course, the Goldman Sachs view on crude. And they are, of course, we brought this yesterday. Glad we bring it again today. That keep this in mind. They believe that there is a little catalyst for the move. But that move has continued today as well. So it's very interesting. Now, what's the trade setup? I think the upside momentum definitely continues. But all large traders that I speak to are watchful of the sell on rise phenomenon. So I don't know how much of a participation is happening from the usual suspects. Most people were hoping for a rally to sell into that rally. Can the falling commodity prices thwart that theory? is the big question. BFSI, to my mind, remains the key game in town. Frankly, you look at everything else, but this sector does not get impacted by commodity prices. Rising rates, in fact, benefit. And if you look at the Q updates from banks, from NBFCs, they're fairly strong, very strong in certain cases. So you can argue that one or two large players have maybe not displayed as much strength, but largely the strength is right up there. So, BFSI, to my mind, remains the key game in town. RBI's move may bring about a sentimental impact on the rupee today, beneficially so, and may have some medium-term benefits. So that might just help in equities as well. Frankly, a depreciating rupee just continuing one way kind of unnerves all forms of traders. So this should maybe be viewed constructively. Last but not the least, to my mind, decent monsoon, and not just in Mumbai. Now we've heard reports of how the wide deficit of rainfall has now been reduced to almost 2% at the last count. But the strong monsoon or decent monsoon, fall in crude and other commodities augurs, to my mind, very well for FMCG and two-wheeler sentiment as well. So do watch out for those pockets. Rhythm Desai and team have come out with a note for the second half of 2022. They say that correlations across stocks may have made a trough, but they continue to signal a market driven by macro conditions and which warrants wider sector positions. So they're following the barbell strategy, overweight on financials, technology, consumer discretionary, and underweight all other sectors. And to their mind, very interestingly, small caps are more attractive than large caps as valuations look attractive. This is a bit of a contra call, though I do think in the Twitter Spaces session on last week, when Shankar Sharma and Vineet Samre of DSP were there, even they have bet on small caps. But largely, we hear people talk about the favoring large caps. So that's the other thing. Flows, FIs, net sold a small number. You have to admit I was circumspect about this. I still am, but they have certainly brought down their selling. Yesterday was a buy number. Today is a small sell number. The last whole week, it's been about 1,500 crores. That flow has certainly ebbed, is no longer that $1 billion, but I still remain skeptical. Conversations with multiple people seem to suggest that this selling will only continue all through the second half, even if the numbers may be slightly smaller. So let's wait and watch. The stocks to watch today, a bunch of them. Titan, robust number. They spoke about it at the end of the last quarter that you watch out for quarter one. And boy, yes, the base is low, but you can't find too many faults with this number. 205% growth YOY on a low base. Jewelry division growing about 207%. 3-year CAGR at 20.5. It's good to compare what the performance pre-COVID until now is. And despite 2 impacted quarters, they've made up for all of it. And therefore, the 3-year CAGR number is also not unimpressive. 20.5% growth is very robust. So I couldn't find too many faults here. Let's see if there is any reaction. The stock's also corrected a little bit, but let's wait and watch. I read, I think, Motilal Oswal note or an MK note, one of the two, which said that this should bring about an upside to street estimates. Their target price is marginally higher, 2,300, 2,400 or thereabouts, but interesting. Macrotech, another one. So real estate is in flavor today. Macrotech, they've achieved 194% YOY growth in pre-sales from Indian business to 2,828.1 billion rupees, which is down QOQ, but up YOY. Remember, this is not necessarily the strongest of quarters. So please keep that in mind for real estate. FY23 sales guidance for the year at large at 11,500 crores. Collections up 53%. They target a net debt of less than 6,000 crores. They, of course, brought it down even further to 8,800 crores, and that payment might continue. Sobha, another one. Sales volume up 51%. Total sales value up 67%. Average price realizations increased to 8,431 per square feet versus 7,626 per square feet YOY. So good show here by Sobha as well, you have to admit. The other real estate player to talk about is Raymond. They've signed, I'm calling it a real estate player because they've done a real estate deal. They've signed a joint development agreement for a premium residential project in Bandra in Mumbai. The revenue potential is estimated at 2,000 crores. I don't quite know about the time frame at which this is being done, but this is good from a Raymond size perspective. EQUITAS Small Finance Bank, advances up 22%, deposit 19%, CASA ratio at 51.74%. Even smaller banks are doing well. As I said, BFSI is the space to watch out for. And an interesting MOU between a large PSU behemoth NTPC and Gujarat Alkalis. Both the companies have signed an MOU to collaborate in the field of renewable energy, green methanol, and green ammonia. They'll explore the opportunities for a supply of 1,000 megawatt power. It's the first commercial scale green ammonia and green methanol project in the country. May not mean as much for NTPC, but who knows, may mean something for Gujarat Alkalis. Needs to be understood, very difficult to analyze on the basis of this. The stock may react. So I've brought you the announcement. We've placed a request for the management. If they talk, we'll get an idea of how feasible is this, what stage they are at, and what could it mean for the company's finances. So maybe that conversation will come up later on in the day. Some other stocks in news include a City Union Bank, which will raise about 500 crores to a QIP. Deep Industries, which has been awarded a letter of award from ONGC for estimated value of $20 million. For Deep Industries size, it's a large number. A top official of a state-run construction company told the Economic Times that NBCC is expected to make 1,500 crores from a sale of upscale office space in Central and South Delhi in the current year. So that could be fairly interesting as well. So these are a few stocks that I thought will be all very, very important to monitor in the session today. Viewers, keep in mind just a couple of things. There is a concerted action or coordinated action from the government as well as now RBI to stem the fall in the currency. Whether or not it succeeds is one thing, but sentimentally it may not be the strongest signal, but it might have some impact. This is more like 2013 measures to my mind, and I would presume more will be coming on their way. So that is part one. Commodities have come off and come off quite meaningfully, and not just crude, across the board, other commodities. That should augur well for inflation statistics as well as for all companies which have commodities as their input cost. So that's a pocket that you might want to see, because all of these stocks were taken to the cleaners really. So don't bet on commodities, bet on commodity users. That's a phrase that so many people are saying. And I somehow think BFSI remains a really strong game in town. But one last thing to keep in mind before we sign off for today, that some of the best people that I talk to while selectively buying small caps still believe this is a sell on rally market, and still believe it's very uncertain to call the near-term bottom a bottom at the current juncture. That's it for today. A lot of important, interesting conversations lined up. I think Ira is talking to Anantarayan and Jayesh Mehta on the RBI's moves yesterday. I have a conversation with Saya Mukherjee of Nomura on their strategy for the second half of 2022. So that's coming in at about 10 a.m. today. And later on in the day, we'll have Twitter Spaces. Remember, every Thursday, we do the Twitter Spaces session with two decent experts on specific stocks or macro trends, as the case may be. Today's conversation is with Gurmeet Chadda and Safir Anand. It's at 8 p.m. So set in your watches if you want to tune in for about 30-40 minutes and ask in your questions to them as well. So that could be an interesting thing to do every Thursday with us at BQ Prime. Thanks so much for tuning in today to the Trade Setup.